Thank you very much once again. And I would like to thank you for the opportunity. The Monetary Policy Committee at its 300 meeting yesterday decided to retain all the rates. And this decision is derived from the analysis that were done across global and domestic economic environment. And the decisions were hinged on 2 or 3 major considerations. The first one is the fact that there have been progressive improvement in some of the key macroeconomic indicators. And so there was actually no need to hike further at this point in time. And if you watch those indicators, we have actually recorded, substantial stability in our exchange rate market. Also, if you see the trend of inflation, it is moderating gradually. And also, we can see the measures of inflation, especially food, maintaining a consistent decline since the beginning of the year. These are comforts and should, give the MPC the opportunity not to hike. The second point is the fact that there have been consistent hike in the past until the last MPC meeting. And given the need that monetary policy, sometimes decisions, they transmit with a lag, there is the need to allow some times so that the impact of the previous hikes should permeate through the economy. And that was another reason that was considered. The third reason had to do with global considerations. We are all aware of the shocks that is coming from the global angle, and that has to do with the US trade policy and the retaliatory tariff measures that have been ongoing from major trading partners of the United States. And they give some concern in terms of the uncertainty of the policy direction of key economies across the globe. And so there is the need, because of that unclarity of policy, to have a pause and, treat with a cautious approach to be able to know when the coast is clear,
right,
to take clearer decisions.
All right, Dr. Obo, but considering what private sector, organized private sector is saying right now, that they cannot grow their businesses, in this high inflationary environment, is the MPC concerned at all, about the cost of credit and, businesses not able to take loans at these rates?
Certainly, the Monetary Policy Committee is concerned about the high level of inflation. And of course, that is why they have decided to stay the course, to be able to, stay the course to a point that moderation can be more rapid than what we have. What we are trying to do is to create a better and an enabling environment for the private sector. The private sector practitioners are also aware that they cannot do business in a state of high inflation. Inflation does no one good. And so what we want to do is to ensure that the Monetary Policy Committee, attack inflation headlong, deploying all the tools that are necessary at this time to see that inflation is brought down for the business community to be able to carry out their businesses. And it might interest you to know that a country like Ghana in March had its inflation moderated downward, yet the hike rate, I think by 100 basis points. But in our own consideration, the MPC in its wisdom felt that it is also important to hold at this point in time so that even businesses that are complaining of high cost of credit should be able to stabilize a little. And as we watch development in inflation, if we are able to achieve some moderate level of inflation in the near future, why not? The essence is that MPC will be able to consider the data that is available at that point in time. But for now, it is very important to stay the course and be committed to ensure that inflation drops to a reasonable level, which is a win-win for all stakeholders.
All right, so is the MPC, really, really confident about the inflation, trajectory we're seeing right now? We've heard some economists actually show some concern about, the latest data that's for the rebased inflation baskets, and how they feel like sometimes the data might not actually be reflecting what's really going on, right now, like, the guest I spoke to yesterday. Does the MPC have any concern about the data?
Well, the Monetary Policy Committee, and indeed the Central Bank of Nigeria, as you know, we are users of data. We don't produce data. That is the statutory responsibility of the National Bureau of Statistics. And we have confidence in whatever official statistics that is released by the Bureau. And so whatever data is given to us, that is what we analyze and we use.
So at this point, is the MPC confident about the inflation trajectory, going forward? Do they see light at the end of the tunnel when it comes to taming inflation?
The MPC is very, very hopeful. And the positive outlook for inflation is because of what we have seen already in terms of the stability in the FX market. It gives some comfort. You can see that the price of PMS, which is a major contributor to inflation, is trending downward. It's also a major consideration. The price of food items is also trending downward. So the outlook is positive. And that is why the MPC wants to stay the course and ensure that we are able to achieve moderate level of inflation within the shortest possible time.
Volatility we see in the global oil market, do you think there's some hope on the horizon that we'll be able to diversify, that the government can diversify the revenue sources, in the short term, seeing that oil prices are kind of pressured at this time?
In the fiscal sector, a lot of reforms are happening. And if you look at the numbers, you will agree, particularly the Q4 GDP figures, you will see some substantial level of diversification away from the oil sector. Yes, it is true that the price of oil is declining at a worrisome level. But however, the level of security that have been able to achieve, that have been achieved in the South, in the oil producing, areas, will be able to compensate in terms of output now, to compensate for that drop in oil price. That is one. The other aspect are the diversification, like items like urea that, have started being exported, and other non-oil produce, other non-oil items have also enjoying some exports. That is going to help to augment whatever loss that will come in. The last point that I need to say is even the increase in mobilization of domestic resources, that now the government does not wholly depend on revenue from oil. Tax reforms and the rest of them are going to help to be able to improve revenue in the fiscal space.
All right, thank you so much. It was great having your perspective today, and definitely we're looking forward to the next meeting to see if things change a lot, before then. Thank you so much, Dr. Victor Obo. He's the Director, Monetary Policy Department at the Central Bank of Nigeria. Thank you for coming on today.
Thank you, it's my pleasure, and thank you very much. Thank you, Nigerians.